So, hello, traders, and welcome to finally a video by me after a very long time. So, I was supposed to give you guys a trade recap for the market movement last week, this whole week, but I wasn't able. So, but I did post a screenshot of an hourly dissected chart review or something like that in my channel, just to give you an insight of what is happening or what happened. I know it was kind of like complicated for those who are not really well versed with all this. And so for that, I just decided, let me do a preview, a weekly outlook video, what I'm trying to observe, what I'm seeing, what probably most likely will happen. And already by there, I'm already in a trade. I took a trade on Friday. I closed half my position to, in the morning when market opened, and then I left a position also. I closed half, left half, and then I've also added something onto it, another position, and I'm going to talk about the trade in this video. So, without much further ado, let me just go straight into it and try and like explain what I'm seeing and the kind of situation we are in. Okay, so first of all, I'd start from the weekly, but yeah, let me just start from the weekly. There isn't much on a weekly. The only thing that I can see on a weekly is this. This is the Nasdaq, by the way. You can see that previous week close was swept here, and then we had a very good close back into the range. Although this is a down close candle, but looking at this as a manipulation. We have been in a bullish environment for a minute, but we were in a range. And this to me looks like an external high for us to come and maybe target the external low, sorry, for us to come and target these external highs over here. Uh, those are the rules of consolidative markets, kind of. But remember, this is a weekly, so this is a very um, sort of like higher time frame. But rules of engagement for consolidative markets is we draw out the external high and the external low, and then we wait for one side of them or of either side to be swept, and then once we get a confirmation, we can take trades to the relative to the opposite side. And looking at the weekly, this looks kind of like that situation. We swept this external high, closed back into the range, and then now we're opening a new week for us to maybe come and hunt all these relative equal highs over here. And another thing is, anywhere you see relative equal highs or equal highs, that is most likely where smart money is going to be targeting, because that is where there's a lot of liquidity. So on a weekly, that is the idea. So let me go down to my daily. That's why I can now start framing my trade or my idea, or I can add more source to my idea. So on a daily, I am looking at this dealing range from this high to this low. I've graded the dealing range levels from the 75, 50, and 25. We have been, for the longest since last year, closed last year, since November 25th, Thursday 20th, 2025, we have been in a market maker buy model. This has, whatever has been playing out is a market maker buy model, but it has been playing out on a higher time frame. And that's why maybe you could feel that price is kind of like, ish. It's playing around, it's consolidative. But from what I'm seeing, it seems like we are now ready to now go and hunt all the relative equal highs that we have been generating. Because look at how price was reacting when we got to the 75 dealing range level, as well as this fair value gap right here. We have been really consolidating. And then look at how last week reacted to this inverse or this fair value gap. It becomes an inverse once we trade past it, and then we come back again and trade through it. So we traded through it, closed below, retested the premium high, and then we displaced lower. So that mostly explains why last week was a bearish week. Another thing is to explain that is, but this is a bit complex or complicated or advanced. The market moves in the algorithm. We all understand that the markets are moved by algorithms. It's not just bare support resistance and buying and selling pressure. There's nothing like buying and selling pressure. So this algorithm is coded to book price and deliver price in certain parameters. And two of its main parameters, or two of its main functions, is to hunt liquidity and rebalance areas of inefficiencies. So that was the whole idea from last week. So we were up here and we used the dealing range to like understand, because the dealing range is, Alican says that the dealing range is um, the market's footpath or blueprint. That is where the market or the algorithm um, draws its that it looks back at the dealing range levels to as areas of interest for itself. Okay, so it's basically the blueprint of the algorithm of the market. So anyway, once we got to this area over here, you can see that we did not sweep this high over here. So this becomes generated buy side liquidity for one time a day, maybe in future, that you are going to come back and hunt this liquidity, because all of this here, retail is looking at this as a strong area of resistance. So now they're going to be faked into, selling, and then just for them to place their stop losses up here, and then for the market to come back and take them out. That is how the market moves. So anyway, once we were up here, this becomes an extreme premium above the 75 dealing range level. That becomes an extreme premium above 50%. This area over here is a premium, and below is a discount. Below the 25 is an extreme discount. That is how the dealing range is subdivided. So the algorithm will move from an extreme premium to an extreme discount, as you see here. We were here at an extreme premium where prices were very high. It doesn't make sense for you to continue buying at this point. Price has to come back down to offer fair value, to rebalance inefficiencies, and to hunt liquidity in form of this low resistance liquidity runs signatures over here, this low and this low. It has to come back to equilibrium, below equilibrium, to a discount level, and it's going to do its mandate: hunt liquidity, rebalance inefficiencies. So what we have, the liquidity over here in form of this low resistance liquidity run, of which we did sweep last week. And then we had this volume imbalance, or an NWOG, because this is a new week, because this is Friday and this is Monday. So this is a new week, NWOG. So this is also an area of inefficiency. And that is where exactly you see price got to. And then look at how it's a volume imbalance. Look at how it's interacting with this level. It doesn't want to close below the discount low of this volume imbalance. The bodies are just being held just below the volume imbalance consequent encroachment, and then we have a reaction from there. Another thing you can see here is we swept this low right there, and then we had an up close candle to the upside, closing above this down close candle. So that to me looks like a change in state of delivery at some, just so to speak. So, but if you're unsure with that, you have another thing here. We have this low, high, and then a lower low. So we have this last down close candle over here, of which I've graded in this form. You can actually grade these PDRAs and fair value gap, an order block, a mitigation block. You can grade them and look at how price is reacting to those levels. That is the beauty of dealing range level of dealing range of the dealing range. So if I calibrate or measure from body to body and then extend, let me just have this in bold so that it does make sense. You can see how we are respecting the 25 dealing range level, and then we also have the volume imbalance just below the 25, the 50% dealing range level of this order block. Look at how the 25 dealing range level of this dealing range from this high to this low aligns perfectly with the 50% level of this dealing range of this order block. When you see dealing range levels aligning, that is how you know that that is a strong area. And look at how the reaction is from this level over here. So this is where I was looking at price last Friday, and I'm going to go into my 1 hour to now make sense of why I took the trade last Friday. So we are in this volume imbalance right here. If I can can adjust this. We are in this volume imbalance right here, right? This is at Friday. So we are at a volume imbalance, which is an area of interest. So all I need to see is a change in state of delivery, of which is this series of last down close candles that dug into that volume imbalance. Once we closed above that, that becomes a change in state. That is my first step of confirmation, right? The second step is I want to see a continuation. Okay, I want to see some sell side liquidity swept first, uh, and then we close above, of which is right here. So even before I talk about that, let me try and make sense of what happened here. So right here, I want to zoom out a bit. Let me go back to my four. Let me go to a 4 hour first to make sense of all of this. So if I can dim out the larger dealing range so that this can make sense, we can see that from the high to the low of uh, of this, from this high over here to this low, we can grade it as a type 2 dealing range. Type 2 is a reversal dealing range. What do I mean by reversal dealing range? I mean, I am expecting now price to now start to seek buy side liquidity all the way to this high over here, which is the all-time high, and this the relative equal highs that we have over here. So I can grade that this level over here as a dealing range level at type 2. And then now I can examine how price is reacting to the levels or the PDRAs nested around those levels. So first of all, I'm going to look at that fair value gap that is nested just above the 25 dealing range level. That's an inverse fair value gap. And look at how price is reacting to it currently. This is Monday's price action. This is today. You can see that if I go to an hourly, this is where we are at currently. So once we inverse that inverse fair value gap or that fair value gap or that balanced price range, we came back, retested it, swept this low, and then now we are having that movement to the upside. So that makes sense for me to continue seeking buy side, and that is why I took this trade over here. For the trade on Friday, as I was trying to explain, once I got the change in state of delivery on an hourly, I just waited for it is just simple. I just waited for this and this fair value gap over here. I came to looked at this so that we had a fair value gap right here, and then at 9, I think 9:30, that was on a Friday, we had this sweep of liquidity right here, and then a close above this down close candle. So I positioned myself somewhere around here and held it all the way to Monday, of which is right here today. So waking up, it really, really played out well. And then we had this brief retracement. I closed half, had my stop loss at break even. By the time we were retracing back to this level over here, I knew that price is not most likely going to come to my levels. I know because I have the picture, the higher time frame picture is telling me that price wants to seek buy side, okay? And we are also respecting a couple of so many PDRAs. We have the inverse fair value gap right there. I want to highlight them quickly. We have that. We do also have this breaker block right here. This is a breaker. Once we invest it, look at how we are once we closed above it, we come back. Look at how we are respecting the consequent encroachment. Bodies do not want to close even below the consequent encroachment. This shows me signs of bullishness. Remember, wicks do the damage, bodies tell the story. Okay, so we have that. We do also have this fair value gap nested right here. You can see. Let me just highlight it. We have so many. Look at how we are respecting the premium high of that fair value gap. So these are all signs of confluences of bullish price action. If I go down to an hourly, I can also flesh out something. I do have this volume imbalance right here that I was looking at, and once I extend price to the like that, you can see we are really really respecting the consequent encroachment. We do not want to close below uh, the the discount low of this volume imbalance. So anyway, not to bore you with so much details, but you can see, as you can see, that there's a lot of confluence around here, and I'm also gauging order flow. We closed above this dotted line over here, which is the 50% um, dealing range level of the higher time frame, and that also gives me more confluence and uh, confidence that price might want to, hunt liquidity to the upside. But I'm not going to count my chicken before they hatch. I'm going to be very, very careful. I'm managing my positions accordingly because I don't know, we might get to the 50%, above the 50% here, take out these highs right here, sweep this liquidity right there, and then probably want to, like, come back and then maybe have something like this. Um, Probably come sweep that and then probably now start move to the downside. It's a possibility. Sorry, it's a possibility, and I don't want to, uh, not to be aware of something of that. So I'm managing my positions currently, and I'm going to be managing them very, very efficiently. So anyway, that is currently my weekly outlook. Anyway, I really want to see if we want to run all the way to the buy side liquidity over here, to the relative equal highs. That is where price makes sense. That is where price makes sense to that it wants to go, or the algorithm. It makes more sense because we already have had a reversal down here. It is still possible that we can come to the 50% level, that, as I've explained here, of this dealing range. We just come and sweep all these highs, rebalance maybe an inefficiency here, because we do also have this. We also have this. There's a balanced price range right there, so we can have an area of resistance, so to speak. We do also have a volume imbalance, as you can see right there. It's a potential area of resistance, so I don't know, so to speak, but I want to believe that this is where we are going, and if that is where we are going, then I'm going to be right. But anything can happen. Okay, so yeah, that is everything that is going on right now. If there's, I don't think there's anything I've not mentioned. The only thing I can say is that we did have an SMT right here with ES. Below this low on Friday, we did have an SMTA, and we also had an SMT right at this point. So these are protected lows. I want to see if they are going to hold. Order flow as well. I'm gauging order flow. 4 hour. Let me look at the 4 hour. If we close above this down close candles, I don't expect price to maybe come back below. It's a possibility. You can see how we're respecting this uh, bullish fair value gap right there. It's just all about order flow. Look at how we're respecting it very well. Don't want to close above the discount. The consequent encroachment, we're just wicking and then closing back above the discount high. So anyway, I'm looking to see if price wants to hunt all this liquidity above and the relative equal highs. But I'll keep you posted on my channel this week. I hope I'm going to be available. But anyway, that's it, and I'll see you in the next one. Cheers.